right, hello, what's up, everybody? Welcome to the Gym of All Trades channel, Trading Night School, for another night of trading. Hello in the chat there. What's up, Tara? How's it going? You're in the right place. You are. I see 15 of you here. Are there more? Are there more? See if I can get you guys. Let me know if we got good audio and video, please. Good audio and video. Let me know it looks all right to you. All right. I got so much going on today, guys. So much going on. Okay. All right. There we go. Got a trade working in Aussie, guys. I'm going to keep an eye on that. So welcome. Hey, Mark, what's up? You guys ready to learn some trading tonight? I hope so. I hope so. I'm sure you guys are itching to know what Bitcoin's doing, aren't you? Well, I'm not going to tell you. I got to get the... I'm trying to find the chat here, guys. Hold on one second. There it is. There it is. What's up, Octavian? Great audio. Thanks, Octavian, for that very, very clear feedback. That's very awesome. What's up, Merle? How's it going? Mr. Chew, 10K. Yeah, I don't know. This is Trading Night School, guys. This is Trading Night School, so we are going to be looking at how to trade. We are currently learning how to trade on the Forex, but really what I'm going to teach tonight applies to all markets. So we're going to be talking about how to develop your own strategy and the winning formula to trading. Okay, we're going to talk about the winning formula to trading. It's critical that you learn what I teach you tonight, for sure. So if you can learn this tonight, you're going to do very, 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 very well trading. Okay. All right. Looks like we're doing very well here. Everybody's looking good. Let me just double check here the stream. 16 of you. All right. All right. Tell you what I'm going to do tonight. Again, we're talking about developing your own strategy, but what I'm going to do for 5 minutes only, is some Bitcoin TA. I've already done a video today, and we talked about the divergence in that video, but also, and I did a private stream for the group. So let me go ahead and just help you guys out just a little bit here and take a peek here. All right. So what we have going on here is, again, we have divergence that is playing out on the. This is the 6 hour. Let me get my favorites up here. Where's my favorites list? There it is. Okay. So downward move here. Okay, from that peak to that peak, upward move here. Probably got some more up to go, I would guess. But yeah, some more up to go. Price isn't looking reversalist yet. Price isn't looking like it's ready to reverse yet. So sorry about that. Those of you who are short, but it could be. I could be wrong. Let's see. Litecoin was looking about finished, or really close to finished the way I was counting it, but Bitcoin, not so much. Couple of ways. Let's see. 1, 2, 3, 4, 5. Let's look at the small time frame here. I've just already hashed all this stuff out. Possibility, guys, that this is a flat right here. I've talked about this already to most of you. Could be a flat right there, which means down from here. We're at the 1618. We do have a nice reversal beginning that looks different than all the other ones. It looks a little bit more dumpy than all the others. So we'll have to wait and see. 5 minute. Divergence. Already got the downward move on the 5 minute. Uh, looks like there's more to come. Looks like there's more to come. There isn't really a whole lot of divergence here. 5 minute, 15 minute. A little bit here of bullish divergence, so we might get it's just small though. Might get an upward move and then a downward move. Um, boom, boom. There's the bearish divergence there, but we got it's not super hidden there. I hear you, James. I hear you, buddy. It's designed to screw you up for sure. Um, yeah, there's nothing to speak of there that's really, helping tremendously. But chances are, I would guess we're going to do something like this and then come down. That we're going to come back, retest the high a little bit and come down, but we're not going to retest it a whole lot. Because, I mean, look at that right there. This is a 30 minute. Okay. This needs to come on down, and so does price. So, yeah, I wouldn't worry about it. We're going to have a down move here back to about 200. What you're looking for here on the 1 hour chart, what you're looking for is you'd really like to see. Um, Again, I've already shared this with a lot of you, so just be patient here, guys. You want to see price come down and not break this low here, whereas the RSI comes down and breaks this low here. So what you have is the divergence that's created. So yeah, then you'll have basically hidden bullish divergence that's going to take us up like that. So that's what I'd be watching for. This comes down to 3 waves. I'm going to go long there, and then it'll be a nice target to the upside. 10K is probably a good target, but 97 is my first target. I want to see 97 hit first before 10K. So let's see. Let's watch 97 because that's the 127. That's the 12618. That's the 2618. I'm sorry. Right here, 97.50. Right here. I'd like to see it come on up here. I'd like to see it come down here first, and then up. But we'll have to wait and see, y'all. We'll have to wait and see. Okay, 5 minutes of TA. It's all you get. Because this is not a TA night necessarily. This is trading lesson night. A lesson in trading on the foreign exchange. Okay. I want to talk to you about how many of you are. I'm curious. It says Trading Night School. How many of you came here tonight for Trading Night School? Let me know in the chat, please. I'm going to give everybody a chance. You came here specifically tonight because you knew it was Trading Night School, and that's what you're here for. You're not here for TA. Let me know in the chat. Get the Forex rocking. Here's my AU trade. Nice. I love it. Love it. Sweet. I'm just curious. Not many people come, and I was just curious. I mean, this is a real. To be honest with you, if I had something like this, I would love it because I would have learned to trade a little bit better. But man, this is awesome that you guys are here every Thursday. Yeah, good. I'm glad it's sweet. That makes me happy. That many of you are here for Trade Night School. Awesome, awesome. All right, you guys ready to rock? Let's rock. So let's jump in here. Um, I want to talk to you about how to develop a strategy um, that you like, that suits you. Now, I'm an Elliott Wave trader, right? And so I like Elliott Wave strategies as well as using indicators. Yeah, Bitcoin sucks, guys. The Bitcoin market sucks. It's all manipulated. Um, there's no regulation. We need some kind of regulation because otherwise, man, they do some crappy stuff. I mean, this market is nothing like the forex. The forex, it's hard. It's a hard market, but it's not like Bitcoin. Bitcoin is. Yeah, Octavian. That's why there's, I get it. I just, this is a great time for me. It's when I'm able to do it. So I'm sorry, but you guys can watch the reruns. You can always watch the. You don't have to catch it live. You can still get the information recorded. It's not as fun, but yeah, I know there is a big problem in the timing with Europe and whatnot. So I get it. It's 5 a.m. Wow, what are you doing up? Did you wake up for this, Octavian? Hey, John, what's up, man? Glad you're here to learn, buddy. Geek boy, oh, awesome. All right, so let's jump in here. I'm glad my trade's coming back here. So, um, anyway, so I use Elliott Wave, and I like Elliott Wave strategies. Um, but you may not like Elliott Wave, and there are other strategies you can use in order to develop for yourself a winning strategy that works for you. Okay. Now I've developed. I prefer to be in and out of trades. Okay. Let me talk to you about why I like to be in and out of trades on the forex. Let me go to the 1 hour chart here. 12:30 lunch. Nice. Right in the middle of the workday, though. It's not great hours. But anyway, we'll do our best here to keep you engaged. Okay, so today's today's trade, for instance, I was expecting. I was actually looking. So I traded this. I got in the market right here this morning, 6 or 7 a.m. It's probably about 6 a.m. I got in right here and rode up this 30 pips, and I actually had about 45 pips of profit in this AU trade, and it was beautiful. Had a great entry. I was playing a standard. It was very nice. Okay, I got it somewhere about right there. Anyway, I was expecting this to be kind of a big trade because I was actually looking at this market like this. One, two. I was looking for three up here, guys. Four and five, and so that was my Elliott wave target there. Okay. Um, so basically, I was expecting uh, price to come on up here in five waves. The way I was analyzing this market. I was actually looking at this wave like a flat right here as a corrective wave, and then I was looking for five waves to finish. Okay. Well, here's the deal. It, you see what price did, don't you? What they did is they came up, but they stopped right here between the 1-to-1 extension and the 127, and then they took it down past my entry. Well, I took my profit up here, guys, because I ain't about to give all that profit up, right? I'm not about to give my profit. I'm here to make profit, not to give it up. So anyway, that being said, I let it come down today. I didn't mess with it. I didn't enter short or anything like that. I just walked away from trading and enjoyed the profit that I had. I had about 350 bucks. I was a little sad because I had 450 on the marker at one point, and I didn't take the profit, and I almost did, but I didn't, and so I gave 100 bucks back, right? But that's okay. I mean, I had a winning trade today, and why do I get in and out? For about 30, I trade for about 15 to 30 pips, but if I think it's going to go, I hold on for a little longer to see if I can get 40, 50, 60 pips out of a trade. I got 80 pips. No, I got 60 pips the other day while I was sleeping. It was beautiful. Woke up to an $800 profit. It was great. I took my profit and walked away with from that. Um, I was trading a standard and a half for that. But that being said, why do I get in and out? That's part of my strategy. Why do I get in and out? Because I'm sometimes wrong about the trade. Okay, and so you see how it came back during Asian session today. It just came back, consolidated, and it just came back. And anybody that went long down here, it's messing. Took all their profit back and scaring everybody out of their trades. Now I have a feeling they're going to bring it on up here. Okay, and so I actually am in long where my yellow line is. Not the best entry in the world. I'm about break even right now, sitting the way I've laddered in. So not the best entry in the world, but actually I am break even. Looking at my phone right now, break even. There it is. Okay. And it's a standard and a half, but I'm expecting a good 20, 30 to 40 pips. So my strategy is to try to take about 15 to 30 pips every day if I can. If I can do that, and I'm in and I'm out, and I'm not worried about staying in trades forever. That's a strategy I developed because what I found is if I stay too long in the market, this is what they do to you. They come back, they take you out of the trade, and then they take it on. Okay, and so they do that over and over and over. So I went ahead, took my profit up here, and I re-entered down here, and I'm hoping to get a good man. Shoot, I'm hoping to get a good 50, 60 pips tonight if it comes. We'll see. We'll see. I may not get it. It may not come, but that would be fantastic, and I'd be in a great position here. So, yeah, it's a good risk to reward. Might be a great Friday. Might be a horrible if they take it down here. It might not be so good, but I'm going to have to stop that out if they do. So you can see my line down here. That's my stop right here. I will cut the trade once. Well, come on. Once I get a candle close on the 5 or 15-minute chart down here, and I'm satisfied that it's broken and it's done. So anyway, if price comes back down here, I'm going to lose $200 or something like that, $300. But the reward is over $1,000. So we'll see. So I got a risk to reward. I'm risking $200 to $300 to make 1,000, and that's a good risk to reward. Okay. Um, I you know I hope I don't lose that. I don't want to lose that. If I see that it's going against me, and I don't like the count, I might cut it even shorter than that. I might only be risking $100 or $50 or something like that. So anyway, but I've developed my own strategy that says, Jim, you need to go for 15 to 30 pips depending on what the market's giving you. Okay, and just take them and run, and take your pips and run, and don't stay in the don't stay in the market too long, in and out. It's more of a scalping strategy rather than a long-term swing trade strategy. Okay, I've developed that for me and my style and the way that I think and the way that I trade and the way that I like to trade. I like the small time frame trading. Okay, I like the 15-minute chart. I like the 1 minute chart sometimes. Sometimes it sucks, but sometimes it's quick in and out and it's fun. But I enjoy trading. And so I'm right now with my lifestyle, an Asian and London session. I can trade the smaller time frames, but if I wanted to trade a larger time frame, then I could develop a different style. But that being said, each of you have your own risk tolerance, you have your own time period that you're able to devote to trading, and you need to develop your own strategy that fits your lifestyle so that you're not having to stare at charts all day, so you can actually trade and live at the same time. And that's really hard because I've donated a lot of time and energy to trading, and it's a sacrifice on the front end because you really have to learn it. But once you learn it, you can enter a trade and go to bed. You can sleep. You don't have to sit and watch charts all day. Now, in my trading group, I tend to watch Bitcoin a lot because everybody's wanting to know, oh, this move and that move, and everybody wants to know what's going on. And so I keep myself apprised of all the smaller moves. But I don't really like watching charts all day, to be honest with you. Some of you guys watch the 1 minute chart, and I used to do that stuff, and I just don't do it anymore. But I used to watch that chart to understand the movement and understand the order book and things like that. Some of y'all are still doing that. You'll grow out of that. You'll get tired of that. Bitcoin will wear you down because it's a 24/7 market. You never get a break. The beauty of the forex is tomorrow at 4 o'clock, market's going to close. There will be no more trading. So you're going to get Saturday and most of the day Sunday, and you're not going to have to wonder if you're missing out. And that's the other thing. You're really not missing out on anything. You don't really care where price is going. You just want to look for a trade every day in the forex, and that's why I like the forex because I really don't care where the euro is going. I'm just looking to get in on a trade today for 20 or 30 pips, and that's it. And that's all I need. I need my mana. I need a little trade today, and then I'll be gone. So that's the way I think about it. That's the way I develop, and so that's what I love the forex. With Bitcoin, everybody, and I'm going to make a video about this, but I'll tell you guys now the basic premise of the video is I think it's a big scam. I think Bitcoin's a big scam, and I think 2017 was a big scam. And here's why. Here's what happened. There were some people that were in on Bitcoin, a very small group of people that were in on Bitcoin in 2017 that rode that wave all the way up to 20,000. And ever since that 20,000 number hit, guys, what has everybody been waiting for? Well, we know that we're going to get a correction, so everybody's been riding this correction out. But what's everybody waiting for? Everybody is waiting for the next moonshot, and everybody's worried to death they're going to mix the next moonshot. And so every pump and every movement of price that goes $200 or $300, you guys are freaking out with FOMO. And see, I don't trade Bitcoin like that. I'm not a hodler. I'm a trader. I know that Bitcoin's always going to be there. I can get in and get out of the market at any time I want to. Hold on one second. I got a cough. I can get in and out of the market anytime I want to. I'm not worried about if I shoot guys. I missed a $300 pump, $600 pump. So what? So what? Because there's gonna be another trade tomorrow. There's gonna be a short. There's gonna be a long. I can enter that trade. I'm not worried about it. Okay, but Bitcoin. But everybody's that 20,000. That's got everybody thinking. Oh, and they're waiting for 100,000. They're waiting for 46K. They're waiting for whatever number is gonna hit. Um, but it's designed, and so that FOMO that Bitcoin creates in you, you know what it's doing to you? It's making you watch the chart all day and freak out, and you're losing your money because of it. And you've got to get emotionally detached from Bitcoin. That's what I love about Forex. I'm automatically emotionally detached from Forex because I'm not worried about missing anything. If it goes up, great. If it goes down, great. I mean, as long as I know the direction, I'll trade with it and we'll keep rocking. So, right now I'm trading long um, with the Aussie dollar, man. I mean, look at it. Let me go to the 8 hour. I mean, look, it's up and up and up and up. Up is the direction right now. Now it's gonna fizzle out, but man, I mean, there's still room in the RSI here. I mean, it's probably going to tank next week, come back down for a corrective wave or something like that. But, I mean, it's coming up, guys. And so as long as I know the direction, I'm going to trade with it. I'm going to trade with it. So right now, I'm long, and I'm waiting for a little bit of a pump up here in this region. Come take out these stock. Come take out this liquidity zone right here. I remember I taught you guys about liquidity zones. There's a bunch of people that got stops up here, and there's a bunch of people that got long trades up here. There's all kinds of liquidity up here for guys to go, uh, you know, to do it. So anyway, yeah, we're trading with AU right now. So I like it. I like it. Um, Hey, I'm in profit right now, guys. Anything above that yellow line is profit for me. So that's great. Probably $20 in profit. Woohoo. Woo, baby. All right. They tried to shake me out of it, though. Look at that. But I mean, look at all that crap I had to wait through. That sucked. Sucked to wait through that. And then once it got up here, I was doing pretty good. And then boom, it tanked again. I was like, oh. So if it tanks again, guys, if it starts coming down here, I'll probably get out of that trade because I look for a better entry. I think it's going to go up, but I'll just look for a better entry. Anyway, all right. So winning strategy. What is the secret formula tonight, guys? What is the secret formula, and what can you do to develop your own strategy for the foreign exchange? Okay, so that's what we want to talk about. Real life. This is not a TA session, brother. This is trading night school. Okay, man. So I'm not doing any TA. Sorry. I know that's what I'm everybody's TA guy, everybody's TA buddy. But this is teaching you how to trade, teaching you guys how to fish, so you can read the market yourself. Okay. All right. So let's talk about the winning strategy. Let me give you the formula right now. Everybody, I want you to learn this formula. There are 5 outcomes that can happen to a trade. Okay, so let's talk about the 5 outcomes of a trade. So this is the 5 outcomes. If I was, did any preparation for this, I'd make slides and show you, but that's not me. So I'm just in my house here with my family in the background and teaching what I know informally. Okay. Um, yeah, real life. It's Sunday night charts is is chart requests. But hey, if you want to learn how to trade, you've made it to the right place. Okay, 5 outcomes of any trade. Okay, here it is. Number one, a big win, a big win. Okay, then you could have a small win. You could break even. The fourth outcome is you can have a small loss. And the fifth outcome is you can have a big loss. So they're the 5 outcomes of a trade right there. Any trade, those are the 5 outcomes. Big win, small win, break even, small loss, big loss. Now, here's the secret formula to a winning strategy. If you can keep this from happening right here, you can keep losses from happening, big losses from happening. Not losses, just big losses. Okay? You will win and you will make money trading. James Nelson, bigger loss. That's hilarious. Okay. So, big loss. Get rid of the big loss and you're doing good. Let's talk about how that works. If you break even, you don't lose, you don't win. Okay? If you have a small win, great. That's a win. That's extra money. Okay? If you have a big win, that's great. It's big. Small loss, you lose money. But as long as you're keeping your losses small relative to your wins, okay, you're going to do well. Now, you don't have to win every trade to be a successful trader. In fact, you don't even have to have a winning percentage to be a successful trader. Let's talk about percentages. Some people ask, well, what's your percentage win to loss ratio of trading? And I don't even think like that. But let's talk like that. Let's just think about it for a moment. Let's say that you trade, and out of 10 trades, you win half of them. Okay? If you win 5 out of 10 trades, that means you lost 5 out of 10 trades. Does that mean you're a break-even trader? Nah, not with this formula. Because if your losses are only small, and you have small wins and big wins in those 5 wins, then you've got 5. Then you're going to end up making more money. Let's use an example. For instance, let's just make it $1,000 per trade. Let's just say you lose 5 trades, and out of those 5 trades, you lose $100. Okay, $100 in each of those 5 trades. So you've lost $500. But in the 5 that you won, they were small wins. Let's just say 3 were small wins for $50, and then 2 were big wins for $1,000. Okay, they were big wins. So 3 wins at $50 is $150. And then the 2 bigs were $1,000 wins. Those were big wins for you. So you're up with a 50% 50% win ratio. You're up. What is it? Almost $2,500, $2,200, something like that. So in other words, as long as we keep our losses small, okay. But let's just say you got a big loss in there. That's $1,000 loss. Well, you got a big win, $1,000 win. It takes $1,000 win to get rid of a $1,000 loss. Now, what's easier for you guys, to lose big or to win big? What's easier? What's easier, to win big or to lose big? I want to see how y'all react to that question, so I'm going to wait for y'all to catch up with me. All right. Aaron, that's correct, buddy. I know you've been reading about that. Liquidation is easy. Get burned by fees. What are you, in and out of trades too much? Are you over trading, Octavian? Yeah, it's super easy to lose. It's a lot easier to lose big than it is to win big. Your psychology, a lot of times, guys will be in a winning trade, but you can't win big because you don't stay in the trade long enough. You're like you've lost so much. You're like you want to hold on to that profit, so you take your profit too fast, and you don't let the trade develop completely, and you don't have the big win because you don't stay in long enough. But you got the big loss is because you take the what happens is with your psychology is you get in a losing trade, and then you're like, well, I'll wait it out. And so you're waiting, and what happens is for the people going the opposite way, the trade is developing for them, and it's developing incrementally bigger and bigger, and so you're losing bigger and bigger until finally you're at the end of yourself, and you finally let go of your position, and then the market turns around and goes your way. Yeah, y'all are jumping into trades, and the market knows how to get you to jump in. It's what we call entry cheese, man. They will give you entry cheese. Yeah. Yeah. James at the water cooler. Tara, why does what always happen? I think I know your question, but define your question. Why does what always happen? So crypto fever, you said only one or two big wins, but the rest have been losses. And so for my strategy is let's just get a bunch of little wins over and over and over consistently, and you'll be a winner, even if they're just little wins all over. And that's the way I trade the forex. Um, so yeah, you close the trade and then it goes the way you wanted it to. All right, let's talk about that because that's a good question. This is more of a psychology question, but let's talk about why that happens, and it has to do with the waves. Okay, so what happens is you let's just say they give you entry cheese, you get a big candle. I mean, look here, guys. Look here. When you saw this big candle right here, this is the 10-minute chart. If you saw this big candle just going straight down, what would you think was happening? What would you think? Oh, it's going down, right? But I just want to show you something. Punch number one, they let off a little bit. Punch number two, it's bigger. They let off a little bit. Punch number three, oh, they exasperate you. That's what they do. Three punches, boom. Let's look at it again. This one's even bigger. Big, oh, sorry. Big punch number one. They bring it back. Okay. Now this punch kind of comes in stages, but that's another bigger punch. Boom. They bring it back. What do you think is going to come now? Yeah, in my opinion, we're going to get our third punch. Boom. And it's going to exasperate anybody. Everything comes in threes. Okay. Now let's talk about that. In an Elliott wave, in an impulse, it's one, pull it back. Two, bigger, pull it back. Three, oh, that third punch gets you every time. Gets you every time. Let me get this off the chart here. So that third punch, okay? So this is when traders can't take it anymore. They're getting rid of their positions up here because they can't. They've lost. They got in down here somewhere. and then prices gone against them, but it came back. And this is what happens. Maybe you get in, maybe price is coming down really fast, so you get in short right down here, and then they start going against you, and you're like, oh crap, but you don't cut it. So and it comes back to your position. You're like, okay, I'm all right, we're okay, good. And then what happens? Boom, it goes away from you really fast. And now you're like, oh crap, what do I do? And you stay in the trade and you're freaking out. And all of a sudden you're like, okay, I'm just going to be patient. And you hold it and you're hoping. And then all of a sudden it comes back. And you're like, oh, okay, good. And it comes back substantially and sharply. And you're like, oh, okay, good. This is coming back to me. And you're waiting for it to come back to your position, but it never does because it gives you that one more. It just starts going up again, and that's your last straw. You're like, oh crap, and then that's when you let go of your position completely, and you lost it from here to here, and you let it go, and then it comes down because they do it in threes. They are the algorithms, the market makers, the exchanges, everybody in the market. It happens. It goes in threes. That's the psychology. Um, that's the psychology of waves, and that's what happens to you, and that's what's happening to you. So here's what I told you guys how to manage your bad trades. Let's just say price was coming down really fast and you got in short down here and then it goes away from you. You only generally get one chance when that thing comes back to your position or close to it for a small loss. Take your small little loss right there and let it go. Even if it goes your direction, let it go. Okay, unless this happens to you and then you're like, oh crap. Okay, so it'll come back to your position at any sign of reversal. Just let that thing go. Okay, if it doesn't go through your position quickly, then you ain't got the trade. Okay, so there's a lot of people talking here. So let me see what you're saying. James, man, you're so funny, dude. So funny. It is interesting, isn't it, John? All right, so that's what happens to you guys. The more y'all understand that, the better. Okay, I hope that's helpful to you. But that's more psychology lesson. Let's keep going. So what you need to do is you need to develop discipline. Okay, discipline. I'm trying to get this out of delete. There we go. Delete. Delete. Um, to cut a trade properly so that you only take uh, small losses. Got to get the big losses out of there. Okay. So, Dimitri, hedging is great if you're on two different exchanges. In America, it's you're not allowed. Now, in Europe, you're allowed to hedge, but in the U.S., we have laws against it. The exchanges won't let you take two opposite positions, so you can't take. But to be honest with you, you still have to have a proper psychology in order to hedge. Um, you know, to be honest with you, if you manage your psychology properly, you don't have to hedge. Okay, you just don't have to. So we got to get those big losses gone. That means you have to have the discipline to cut a trade at a small loss. Okay. Aaron's saying, I finally figured out that I was only going to succeed at this was to focus all of my energy on education and not worrying about watching charts and hoping things go in my favor. That's right. That is right. Uh, people and people that are dependent upon me for information, you guys are going to lose. Y'all are going to lose big. My channel is about teaching you, giving you information, yeah, but it's really about teaching you what I've learned over the years about trading so that you don't make the same mistakes that I made. That's really the heart behind my channel. I want to keep you, prevent you from making the mistakes I did, because man, I've learned the hard way, buddy. Listen, I as a grown man have cried like a baby because of positions I've been in, and uh, It's even affected sometimes my relationship with God a little bit. I'm asking the Lord why He lets that happen. And there's all kinds of psychological stuff that's gone on in my life because of trading and winning and losing. And let me tell you something, it is horrible. It is horrible what it does to you. And so until you learn to manage your psychology and understand this market, guys, you're going to lose, and you're going to lose big. And so I'm here pulling back the veil, showing you why you're losing your trades. Okay, in my trading night school, my first psychology lesson, in lessons number 1 or 2 or 3 in that ballpark, why you lose trades. Those are critical. These psychology lessons that I'm giving you guys are worth their weight in gold. They really are, because this is what trading is all about. It's about managing your mind and coming up with and disciplining yourself. Okay, but some people can't discipline themselves to take a small loss. Um, I still struggle with that piece of my trading. That's why one of the reasons I'm personally not full time yet. I am not satisfied with my discipline in that area and my own psychology. I'm much better, but I want to be more consistent with my cutting bad trades quickly for small losses. Okay. Um, so anyway, I'm still working on that in my own world and in my own strategy. Let's see. All right. So this is the winning formula. You get rid of the big losses. Okay. So if you can do that, you're going to win. If you can't hold a trade long enough to get the big wins, just go for the small wins. Small wins, small wins. Just get a consistent win over and over and over. I showed you guys my spreadsheet, right? Um, I showed you previously my spreadsheet on trading with, just getting small gains every day, 15 pips a day. 15 pips a day is all you get. Just get yourself 15 pips a day. You can triple your account in a matter of 2 months easily. Or actually, no, you can do a lot better than that. You can just it becomes astronomical what you can do with it. So, anyway, just being consistent with 15 pips a day, 15 pips a day, 15 pips a day, you ought to be able to do very well. All right, so let's talk about now developing a strategy for this. So you need to have, this is the winning formula. Okay, get rid of big losses, need to go. Small losses only are allowed. Okay. The second piece of it is, how do you develop a strategy that you're comfortable with? Well, a lot of guys don't understand Elliott wave like I do, and don't see the market like I do. They see it differently, and so. For instance, guys, I mean, I don't know how you look at this wave, but I look at this as a three wave. This is an ABC, okay, um, or a 1-2-1-2 potentially. And so, yeah, I'm seeing that as a potential three wave there. So I'm very aware that this might not go up, but it very well could. So I'm trading that to the upside for now. Ready to cut it probably. It's probably going to come back up to this region before it comes down. But again, because I see a three wave move right here, okay, and I put the fibs on that guy, and I say, okay, we should get an extension out of that to the 1-to-1. Boom, you see my yellow line right where the 1-to-1 is? I mean, can you see that? I mean, right where I put my yellow line. So, I mean, I can expect that many pips out of this trade, most likely. RSI supports it to the upside, at least there's room for it. So there's 10 pips here. I'm on a standard and a half. This is a $150 trade, even if it only comes up to here. Now, it could go up higher. We'll have to wait and see what happens. What was I saying? Oh, Oh, anyway, you may not see the market like I do through Elliott Wave. You may not be as good as I am at Elliott Wave, and that's why you watch my channel and everything like that. So you might like EMAs, okay? And I've shared the EMA strategy. Let's go to the 1 hour chart. Let me remind you of not the EMAs, but the moving averages, okay? Let me remind you of our moving average strategy I've shared with you. There's a couple of ways to do it. The yellow line's the 20 and the red line's the 50. They're simple moving averages, and here's how you trade it. Basically, you trade it from the 1 hour chart, and there's two ways to trade. Once the yellow line crosses the red line right here, okay. Once the yellow line crosses the red line, okay, that's where you can enter long long for a trade, and then once it crosses back, you close the trade. I don't like that particular way to use the moving averages because I actually use price action, the actual price action crossing the yellow line. So once I have price crossing the yellow line, that so price becomes a moving an average line, but it's the zero average, right? So basically, once price crosses the yellow line and maybe even the red line, and then retests it like this right here, then you've got and then bounces again. Okay, so I want to see it cross, retest, and bounce. There's my entry right there, and I get all those pips. Okay, so that's a moving average strategy. Okay, now there's different ways to do that. See, there's different entries and different, and so what you need to do is, if you say, well, I kind of like that strategy, I like that moving average strategy, well, here's what you need to do. Um, there's nothing that is more important than you sitting at a computer and back testing your strategy. Okay, that's critical. So what does it mean to back test a strategy? Well, I'm on AU right now, and I want to say, okay, if I had the rule, if for instance, if I had the rule that every time price crossed the yellow line, I entered in the direction of that trade. Okay, if that was my rule, that basically when I had price that crossed the yellow line and I entered the trade, how many times would it be a successful trade? How many times would it have stopped out? And then that's the question. Can you develop a stop strategy based upon what you see price doing? Like for instance, I'm just coming back here. For instance, right here in this moving average strategy, price crossed. Okay, you enter. How many pips would it give you? That was 28 to 30 pips right in there. Okay, so if you got in right on the cross, now it would have come. This you can see. You can see it crossed and then came back. It came back and it finally crossed. Okay, so if you got in right at the cross and the close, then I mean, how many pips you get out of that? Maybe there's 50 pips right there, right at that one. Okay, so this one gave you some pips. Okay, this one gave you some pips, but how many pips did it give? Okay, and then but look at the price action. Look what it did. It came and then it came back across. That would have stopped you out. And then it came back across. This would have got you back in, and then you would have gotten the pips. So what you do is you go back and what you try to do is you look at what the price has actually done, and you try to develop a rule set based upon what you see. You develop the rules, okay? So how are you going to keep yourself out of bad trades? What are some rules that you can make for yourself that are going to keep you out of the bad trades and give you a higher win rate? So how can we tweak this strategy, for instance, this moving average strategy, so that we catch this big wave like that, but we don't get caught in this little this correctional period? Okay, well, I mean, a couple of things. And this is where you have to develop your strategy. You can say, okay, let's make the rule that the price has to cross and close beyond. So it's not just the candle going across it and coming back. And this is the hourly chart. You say, I'm going to trade on the hourly chart. I need an hourly close on the other side of the moving average. If I don't get the hourly close, then so that might be a rule that you give yourself, and you say, okay, let's see how that would affect. So here we got an hourly close, boom, that gets you in the trade, but it immediately went against you. But what you're looking for, you might say, well, it's got to be an hourly close on the other side of the moving average for your stop. But then this would have stopped you out. You would have been in bad trade for 30 pips or 20 pips, something like that. That would not have been a fun trade. Okay. But then price went for you again, but this one didn't stop you out. It just kept on going, and so this one stopped you out. You lost 30 pips. This one went on, and you gained what? How many? 50 pips. So you lost 30 pips. You just won 50 pips. You're up 20 pips, right? But so how can you get that 30 pip loss out of there? How can you protect yourself? Okay, so I don't like that rule just because it crosses. So I got a cross and a close, and then the stop is if it crosses. So let's add some more rules. Let's see if we can. Let's say okay, we got a cross, and then let's add the retest to it. This is for instance my strategy. I want to see it cross, and then I want to see it retest, and then I want to see it bounce again. I want to see a candle. I want to see a candle bounce again. So now let's go back and let's apply that rule and see what happens. Okay. Okay, so right here we have a candle cross and close, and then it retested, okay, and it bounced again. Here's my entry, okay. I enter right here, and look what it did. I get stopped out right there. Bummer. Okay, that one stopped out. Let's try it again. Crosses, it retests and bounce. There's my entry point. It goes up. It comes back and tests. Man, I got stopped out again because it went beyond the 20. Man, but this would have, if I it would have held it, it would have been a great trade. So how can I now make a rule for myself that's going to protect me from these false bounces? Okay, you might say, okay, I'm going to let it when there's a change in direction and the moving averages are close. I'm going to say when it crosses the red one, when it so if there's a for instance, if price crosses the yellow and the yellow is on top of the red, I'm going to give it that much room to the red one and let it bounce from there. Okay? And so again, all you're doing is you're trying to look at a strategy and say, okay, is this going to work for me in real time? Because here's the deal: you can go back and back test and see how many times it'll work. But if you, but let's just talk about forward testing. All right, what are we going to do now? Like right now, look here. We got a yellow cross right here. We got a yellow cross, and then we got a close, and now we're getting a retest. Now but we're at the beginning of the hourly of this hour. So when are we going to stop this thing? Okay. Well, maybe if it crosses that yellow line and closes beyond that yellow line, or maybe if it just bounces on this, we'll stay. What's going to be the rule? But you're like, oh, I don't know. I mean, so we got our entry, we got the retest entry right now is the entry point, but this hasn't closed because we haven't seen the bounce again. So we're retesting it. So what we want to see is we want to see another hourly candle next hour. You're gonna have to be patient and wait for it, but we want to see another a green candle right here bouncing off that yellow line to the upside. There's your entry point, and we go maybe. Okay, again, but you don't know what's coming, so we don't know if it's going to do this and then this. You don't know, right? And so you have to develop a strategy that's going to keep you out of trouble, a strategy that's consistent, that's going to give you wins on a consistent basis, keep you out of trouble. So you're going to need to develop a rule set that allows you to win and do well. Okay. Okay. So that's an example. So you might say, you know what, that's not enough. The moving averages aren't enough. Let's talk about RSI for a minute. Let's bring the RSI into it. Okay. So let's say this. I'm I'm only going to go I'm only going to go long if there was let's just say maybe if there was divergence. Let me change my setting for a minute. I was playing with something earlier. Okay. If there was divergence, okay, or I'm only going to go short if there's divergence. So you might say, okay, I've got to have divergence on my chart as well for entry. So, for instance, right here, to add that rule, we have divergence right here between this wave and this wave, okay? And we have price crossing the yellow line, okay? There is no retest. It did not retest on the 1 hour chart. So you wouldn't, if you were having a retest rule, that you would not have gotten it. You would not have gotten that. If it, so you lost this trade. I mean, you wouldn't have gotten this trade. But man, that would have been a great trade to take. You had the divergence and the cross of the yellow line. You would have gotten 70 or 80 pips before it reversed on you. Okay, so there's an example. There's an idea for a trade. or a trade setup. You can add the RSI divergence. So what I'm telling you guys is, you guys develop a strategy and you begin to you do the back testing and you begin to develop your own rules that are going to protect you from the bad trades that strategy offers. Because the bad trades every strategy offers bad setups. The market will take your money. There's no 100% strategy. So what you're trying to do is minimize the risk and increase the probability that you're going to have success. So you make rules and rule sets for yourself using the strategies and different indicators or whatever that are going to protect you. So you need to do the work. You've got to do the work and create the rule set for yourself. There is no taking someone else's strategy. That's for one thing, and I teach my strategies, right? But developing your own set that you're comfortable with is really what you need. You're going to learn so much by back testing these strategies that you create. So you might try this moving average strategy and see how it does. You might play with the time frames. Okay, you might play with the time frames. When do I get the longest trades? Well, I mean, maybe on the 4 hour, right? Maybe the daily chart. Okay. When price crosses the day, I get a daily close above the moving average. Boom, go long. What would that have given you? Man, look at that. That would have given you 200 pips if you had taken that trade. You had a daily cross and a close of the moving average. Boom, you're in there. You might play with the Heikinashi and say, okay, let me try Heikinashis. Okay, because Heikinashis really give you're gonna have to do your own study about what Heikinashi is. But you might trade the daily chart and say, oh, I gotta close beyond that on the Heikinashi, and I'm only gonna get out when I see the chart cross back over uh, the yellow line. So when price comes back, you might just say, hey, or the first red candle that you get, you close your trade or whatever. There's all kinds of ways to do it. So you could trade different time frames. You could trade different types of charts, whether you use Heikinashi or the candles. And I'll actually teach some Heikinashi here eventually. But play with the time frames. Shoot, you would have been able to sit in this trade for 1, 2, 3, 4, 5, 6 days, 6 days, and not do just one trade, and that would have put you in the money for at least 300 pips on this trade alone. Okay, if you had just used the moving average cross. Okay, you had a major your rule set on the daily. You had a major oversold here. Um, Now, what I like to do, just so you know, and I taught you guys last time, is I like to add an indicator on the RSI. So I like to put a moving average on the RSI, okay, and I set it to 10. That's something I came up with. I've never seen anybody do that or talk about doing it. So what one of my strategies is, when we have a major oversold, on a particular time frame, and then we have a cross of the moving average. In other words, the moving average crosses the average. Boom, that's an entry point. Okay, and then we don't get out of it until that price crosses the moving average a second time. On that rule set, guys, you would have gotten in right here somewhere, and you would have gotten out right here somewhere. That's 500 pips, guys, over a period of 22 days. 500 pips, one trade. There it is. Uh, well, okay, so Danny's asking a question, and the question is, what about just trading the hourly chart? Um, Overbought and oversold. Okay, so he's thinking, okay, what if a strategy could be, I trade on the hourly chart, and I my rule set basically is I trade overbought and oversold. Okay, so let's get rid of the MAs. Done. All right. So what we're going to do is we're just going to kind of go back on the chart, and we're going to say, okay, how often? What's the rule set for how oversold does it have to be? That's a question. Okay. How oversold does it have to be? How overbought does it have to be? Does it have to hit a certain number, for instance? So let's just talk about the way you might attack this. So price came down right here, and it's way oversold. Right in here, it's oversold. Okay, so if your strategy is, okay, well, it's oversold, so I'm going to go long now. Well, you got a problem, because you're buying in the middle of this wave. So you're going to have to, Danny, you're going to have to come up with a rule set um, You're going to have to come up with a rule set that keeps you out of getting into early like this, because the RSI on the hourly can be oversold. But look, you look at all this down move we had. And so you might say, okay, I need to see divergence first. Okay, so I need to not only see it oversold, but I want to see divergence on the hourly chart, which we have exaggerated divergence here. So you say, okay, I got price coming down, and then but the RSI is flat right there. That's exaggerated bullish divergence. Okay, and so now once you see that divergence, now here's the thing: you had some bullish divergence here up to this point, but you're still in too early. Okay, so how are you going to get yourself into the trade to where you're not too early? Well, for me, I put the moving average on it. Okay, I put the moving average on it, and then I got something. Look here. Okay, when price crosses the moving average, my rule is, and it retests and bounces off of it. So the first time that actually happens is right here. I had a price. I've got divergence here. I've got a cross and a retest and a bounce, and that happens right in here. So my rule set would get me in the trade in this region, and I would get that. Okay. So there's an example of something I developed to keep me out of getting in too early right here in the middle of a wave when it's still coming down. Okay. That's something I developed on my own. I said, what can I do to keep myself out of those trades? Because I don't know when that's going to happen. Because sometimes it just comes down and touches the RSI, and then boom, it's off. Look, this came down, touched, and boom, it's gone. Okay. So, but here, look at the strategy. Now, I didn't get a retest. Like, look here. It crossed the moving average and it just kept going. Here's my little retest right here. Right there. So that's my entry point. Okay? And I don't get out of the trade until it crosses the moving average and then bounces again. Okay, so in other words, I mean that could be a strategy, or you just, once you get oversold, you go ahead and sell it. But man, look, if you went ahead and sold your long position, you only get this much. If you had waited through it a little bit, look at all that. Look at all that you would have gotten. So how are you going to develop a strategy that's going to allow you to get all of those pips, or to maximize how many? So what rules are you going to have? What indicator are you going to use? And then you're going to back test it and say, how would this have worked? Would it have worked? And so all I'm doing, I'm not giving you the strategy here tonight, guys. What I'm saying is you need to develop your own strategy using the tools that you like. If you like an indicator, fine, but test its indications. Does it give you good indications? How are you going to keep yourself out of the bad indications? Okay? What rule set? What are you going to add to it? You know, you might have 2 or 3 indicators. Okay? Well, you might say, okay, I got the RSI oversold on the hourly. And then I have price crossing back over the 20 period moving average. Okay, once I have that, you might say, hey, wait a minute, Jim. You don't have to. What if you changed? Let's see. What if you actually? Oh, I can't change it here. Um, what if I? Let me turn this off. Let me add just a moving average. Let's just keep the 9 period moving average on there. Okay. Um, Settings. Let's make it nice and thick so we can see it. Let's make it green for money. Boom. Okay. So let's just say, okay, to add, Danny, to add to your strategy, you say, okay, we're going to add a moving average to our price up here. So here's what we're going to do. When price gets oversold on the hourly, I got it. That's one rule. Second rule is I got to see divergence. When I see the divergence and the price is oversold, that's good. But the third thing I have to see, my entry signal is this: when price crosses the 9 period or the 10 period. Here, let me change this. When price crosses the 10 period moving average, then that's my entry point. And that'll keep you out of some of the bad trades. It won't keep you out of all the bad trades, but it'll keep you out of some of them. So that might be the way. And then you're going to have to say, okay, how many pips am I going to take? Because this one would have given you something like, 60 pips or 50 pips, and that's a great trade, right? But the problem is it came all the way back to your entry and passed it, and then it went up. And so how do you get that trade? Well, We don't have the divergence down here. We just have a cross of the moving average and a cross of price. And you might say, okay, that's what maybe that'll be my rule. I don't have to have the divergence. Maybe I just need to have a cross of the moving average and a cross of price. When I get the cross of price and the moving average, then that's my entry. You can be as aggressive as you want. Maybe you say, well, let's try the 2 hour chart, see if that gives better signals, keeps me out of some of those bad trades. Or how about the 4 hour or whatever? You change, and that's a pretty good signal giver right there, buddy. Um, I mean, look, uh, here's the 4 hour chart. Let's see, price crosses on the 4 hour, it retests. That would have broken so you're gonna have to come up with rules for the 4 hour. The whole point I'm trying to give you guys is you come up with the time frame, you come up with the indicators, you come up with the rules, but just make sure that you have to develop those rules that keep you out of bad trades, that keep your losses. So what's going to be your rule for stopping? What's going to be your stop loss rule? Oh, thank you, honey, appreciate it. I have popcorn. Oh yeah. So that's what you got to think about. What's going to be your rule for stopping that trade out? Okay. So, all right. Any questions? How are you doing with this information? Again, this isn't. I'm not giving you. This is where you guys have to go and do your own homework. You have to sit and look at the chart. You got to sit and back test the strategies. I've just given you some ideas that I've played with. I like the moving average strategy, but you got to have a rule set. So, what are the rules? Okay. I gave you guys last week a very complex moving average strategy that involves. Moving average on the price, moving average on the RSI, divergences on the 1 hour chart, and I've given you some of those rules. But uh, how are y'all doing on this? Now, if I can just get every one of you to give me a buck 50 every trading night school, that'll be tuition for each week. That'll be your give back for the week. Thank you so much, my brother. Appreciate it, Geek Boy. All right, how we doing? How we doing? James, if you can't do it, you got to stop trading. Crypto Fever, it is about discipline, but it's also about setting rules for yourself so you follow so you have rules to follow that are objective, and they get you into good trades and they keep you out of bad trades. And so you guys got to go do that. Remember the engulfing strategy I gave you guys? Let's explore that for a minute and talk about the rule system. So let's say an engulfer, okay? Um, so what was the strategy? The strategy is this: as price is coming down, I'm looking for an engulfing candle, okay? Like right here, this is an engulfer right here, and then I'm looking for a 50% retrace. If I don't get a 50% retrace, then it's not my trade. If price goes beyond the below of that, then it's not my trade. So here's an engulfer right here that came back 50%. Here was the entry, and you got all of this, okay? Here's an engulfer right here. This came back on this candle right here, 50% on the 15-minute. You got all of that, okay? This one didn't give you an engulfing candle. That's not your trade, okay? Um, this one, you got two that kind of gave you an engulfing here. Price came back to you right here. There's your trade. So you got to develop rules for yourself. What time frame are you going to do the engulfing candle strategy? Right here. Here's an engulfer candle right there. It engulfs everything, comes back 50%. There's your entry point. Boom. You're in that trade, and that's a beautiful trade. So remember the engulfing strategy I shared, but you got to back test it. Say, okay, what times did it work? What times did it not work? What? You might one of your rules might be I'm only going to do this during the London session or during New York session. I'm not going to do it during other sessions. I'll tell you what, the engulfing strategy doesn't work super well during New York session. Just saying. Okay, uh, London session is much better. I mean, you can use it during New York, but it's a lot harder. Okay, all right. Um, There's trading night school for the week. Let's see what you guys are saying. Trying to decide where to take profit. It's one of the most difficult things for you. Yep, Aaron, taking profit is still hard for me too. But if you'll develop a strategy, a rule set for yourself, Aaron. Okay, I'm gonna take profit here. You might say, listen, 15 pips, I'm taking it. That's it. I don't care if it goes up. That's my rule. You might say, okay, when price, if I get 15 pips, I'm going to move it to break even, and if it comes back and stops me out, it's okay. But I'm going to let it run after that. Let my stop run. You can come up with all kinds of things, but what's going to give you the maximized profit by keeping your losses, um, you know, intact. Guys, my AU trade's looking good. I've had to wait through a bunch of all this stuff, but I'm hoping it starts trending to the upside. Oh no, Juleman, you can rewind it, buddy. You can rewind it. You can rewind. Look at for those of you who like chart patterns. Oh, what do you see? I'm really hoping this plays out. What do you see? I think this is about to bust open, guys. If you want to trade AU long, this might be, if you get a break of this line right here, which we're about to get, I think that's going to be a good trade to the upside for a little bit. At least a 1-to-1 extension. 1-to-1. How many pips is that? That's 30 pips. Do I use TradingView as your platform for Forex, or do you use something else? I use TradingView always, and I do. If I click forex.com right here, you'd see my account. So I'm not going to do that. But I actually attach forex.com to TradingView, and you can only do that with a handful of what do you call it? Exchanges or brokers. And so basically, just if you click the trading panel button down here, you'll see a list of brokers: Awanda, forex.com, and different what do you call it, exchanges. So yep. They're working that range, aren't they? All right, everybody. There's Trade Night School for the week. It's simple but important. Okay, keep the big losses out. That's the winning. That's the winning formula, and then develop a strategy with a rule set that's going to keep you out of bad trades. You can start working on your own strategy. You can see other people's strategies, and then tweak them. Take the ideas that I gave you tonight, and then add to it and tweak it. Oh man, you're awesome, dude. Thank you so much for that. I appreciate that. Really appreciate that, Julemon. Thank you. Yeah, Tara, I figured it out where it lapsed a little bit. I figured it out. Thank you. 1999. Awesome. Awesome. All right. What's Bitcoin doing? Anything? Hmm. Looks like it wants to roll over, but sometimes it looks like it's rolling over and then it goes up. All right. Well, thank you guys. I really, really appreciate the kind compliments. Looks like Aussie is giving us the up that we're looking for. I'm in profit. I got I got profit here. That's awesome. Terra, it might have more upside to go. We'll see. But it is dropping, but dropping slow. I'll keep you apprised. Come on, Aussie, go. Andres, you're welcome. You're welcome. Go, baby, go. All right. Well, y'all have a good night. Everybody in the trading group, I will see you guys in a little while. I'm going to be heading to bed here shortly, but I'll give you some final TA for the night. And everybody else who's not part of the trading group, come join us. We have a lot of fun. We got a new month coming. May is almost over. June is getting ready to start, and it's a great time to join the 1st of June. Don't join before because they'll charge you, and then you'll pay again on the 1st, and that's the way Patreon does it. I don't have any control over it. So anyway, yeah, wait till June 1st to join if you're going to join. So anyway, all right. Yeah, Forex is a lot of fun, Tara. Lots of fun. We have a lot of fun there. Yeah, Yulimana was a good one. I think. I hope you learn a lot from tonight. So, you guys have a great night. We'll talk to you later. Enjoy your family, and we'll see you around. Okay. All right. We're gonna end the stream now. Bye bye.